Hello everybody, it's Yashar here, back again with another video. And in this video, I will explain why trash is such a great business. We are diving into Waste Connections, one of the largest waste management companies in North America. With solid earnings, steady growth, and a recession-resistant business model, is Waste Connection a strong buy for 2025 and beyond? That's what we are going to explore today. Waste Connections operate in solid waste collection, recycling, and disposal services, primarily in United States and Canada. Unlike competitors like Waste Management and Republic Services, Waste Connections focuses mostly on secondary and rural markets, giving it pricing power and lower competition. This will account for almost 90% of the revenue of the company. The company HQ is located at Ontario, Canada, and their shares are traded on TSX for almost 255 Canadian dollar at the time of recording this video. They pay a dividend with a starting yield of almost 0.68%. The market capitalization of the company is also around 66 billion Canadian dollar. Look at the stellar financial metrics of the company in the recent years. 11.6% CAGR revenue growth in the last 5 years. 13.3% adjusted EBITDA, continuous margin expansion, and almost 12% adjusted free cash flow growth. Amazing metrics. Combine all these growth metrics with the predictability of the business and multiple expansion, and you will have a stock that its returns completely destroy major indices. If we look at the performance of this stock in the last 10 years compared to major indices like S&P 500, TSX, and the Waste Index, it outperformed all of them by a huge margin. It is up 569% in the last 10 years, which is 1.7x of Dow Jones Waste Index, 2.6x of S&P 500, and 4.3x of TSX returns in the similar time frame. But like every other business, there are good aspects and bad aspects about Waste Connections and their business. Of course, garbage and waste handling is probably one of the safest business models and the most necessary services every society needs, so the company is king of recession resistance. The numbers clearly show the business grew their revenue and margins in all financial environments, which is great. But we should always separate the business and the stock. For many investors, the major concern with Waste Connections is not the business model. The business is great. The concern is the valuation. The stock is currently trades at a crazy and ridiculous price to earnings of 75. Okay, I know, a lot of investors are saying we should not look at price to earnings for a business like Waste Connections. And that's true. I rather look at free cash flow of the business. The reason is waste management is capital intensive. So you will have trucks, landfills, recycling plants. So depreciation and amortization are huge expenses. So free cash flow adjusts for these, showing how much actual cash this company can truly generate after maintenance costs. Unfortunately, the stock currently trades at a price to free cash flow of 40, which is again much higher than its historical average of around 25 to 30. So not only strong fundamentals, but also significant multiple expansion resulted in this recent surge in the stock price. I agree that this stock should trade at a premium, but how much premium is too much? That's the problem, and that's the question. So usually this is the problem with today's stock market in general. Okay, with all this information in mind, now let me go through the valuation of Waste Connections using my own model. To start building the model, I imported a series of general parameters from Waste Connections earnings report, like the current share price, their revenue, their number of shares, their net debt, which is their short-term, long-term liabilities minus their cash or cash equivalents, and their free cash flow per share. I also put my expected rate of return to be 10% for this stock. I usually use 12%, but just for the sake of demonstration, let's stick with 10%. Now, in this model, I will calculate the fair value of the stock by projecting their future free cash flows and then discount the terminal value and future cash flows minus the liabilities of the company back into the present value of the stock based on 3 different scenarios. In the bear case or the most negative case for the stock, the business will have a little bit of margin compression. I considered 0% share-based compensation, 0% share dilution, and I assumed they're able to grow their revenue by 9% in the short term, 8% in the midterm, and eventually by only 7% in the long term. And I considered a terminal multiple of 25, which is in agreement with historical bear periods of the stock. For base case or normal case, I considered a little bit better margins in line with the current free cash flow margin of the business, a normal revenue growth in line with analyst expectations, and finally a terminal multiple of 32.5, which is close to its historical multiple. Finally, in the bull case or best possible outcome, I considered a little bit profit margin expansion, a 15% short-term, 13% midterm, and 11% long-term growth, and a terminal multiple of 40, which is a bull multiple for the company, basically similar to the current valuation of the stock, which is at its all-time high. Now, with all that optimistic numbers, if I hit calculate, the software will give me some valuable information about this stock based on my assumptions. It gives you the intrinsic value of the stock in each scenario, and then it will provide you with a fair value estimate, which is 173 Canadian dollar per share for Waste Connections. Comparing to the current share price of 255, Waste Connections is traded at almost 32% premium today. It is not a buy according to the model. It means based on the current assumptions, which are optimistic to begin with, the Waste Connection stock is not even able to return 10% per year in the next 10 years. If you believe the assumptions in the bull case will happen, and the stock will grow significantly and they will hit all their growth targets, and the stock can also keep its free cash flow multiple, then yeah, the stock is attractive here. But for me, I want to be more conservative with assumptions, so it is a pass for me at this range. Waste Connections is a great business. I love to own this company someday, but I personally would not pay such an exuberant premium even for Waste Connections and will prefer to wait. If the price never comes down to my target price, I'm still okay by investing in other businesses which have better valuations. But if someday the valuation does make sense, I'm definitely interested to own this business in my portfolio. There you are, guys. I hope you enjoyed the video. And if you enjoyed the video, consider subscribing to the channel to see similar videos. Thank you for watching, and I hope to see you guys in the next video. Farewell.